Let me welcome you on our next panel discussion. But before this starts, there's a small presentation from Juraj Forgács from Fumbi. So let me first welcome you on the stage, which is yours now.
Thank you very much. And thanks to all of you, because the day has been quite long and all the topics we have already covered were quite exhausting. But the next one is, I think, very important and very interesting as well. Let me jump right into it. And I think the panel guests will later discuss it as well from their own angles. We are talking institutional adoption of cryptocurrencies, which is the topic of the next couple of years. So as I see it, cryptocurrencies are developing and have been developing in quite distinct stages of their development. So we can recognize cryptocurrencies which are currently only in the stage of experiment, such as, for example, I don't know, Axie Infinity or whatever, which is a technological novelty, but you don't even know what will happen to it at all. And then you have cryptocurrencies which have passed into a stage of alternative asset, which is something that is already considered a target for your money. But usually it's quite risky money. So we are talking Solana, for example, or Avalanche. Then, and this is actually what is happening these days and these years, is that a couple of cryptocurrencies, or maybe only one of them, will become slowly a standard asset. Definitely, Bitcoin will become a standard asset quite soon, and possibly Ether. Maybe some other will join them later. What does it mean? Standard asset means that it will be everywhere. Bitcoin and some other cryptocurrencies will be a target for conservative capital investments, not only risky capital investments. All the shops around us will accept it. You will be able to hold cryptocurrencies in your own self-hosted wallets, but also using custodians. You will be also probably having some cryptocurrencies in the banks and in your retirement plans. And when this is all played out, we can say that crypto is finally a standard asset. And then there is the next stage that was just maybe drafted here. Possibly Bitcoin can become an asset of geopolitical meaning and importance, but it's far away yet. So when it comes to standardization of crypto, it's all about risk reduction. There are some other aspects here, but they are all coming out of the risk reduction. So let me briefly introduce. So far, cryptocurrencies have been associated with quite a broad portfolio of risks, especially for companies and institutions, and that's what we are discussing here. Whether it's a blockchain attack or custody and management challenges, AML criminality, as well as volatility and market manipulation, these all were risks that were simply unacceptable for big companies, even for small companies, or for institutions or financial institutions. So just briefly going through it, custody and management risks were probably the biggest risks in the blockchain technology before the institutional custody solutions were invented. So the technology of multi-party computing or technology which is used by Ledger Vault are technologies that allow companies to encrypt their authorization flows, and that's how crypto is slowly becoming not only a bearer's asset, but an asset that can be managed by institution based on a standard authorization flow. So this is something of immense importance. Of course, this is connected to hackers' attacks, losing the keys, wrong transfers. And in the ecosystem that was here before 2018 or 19, it was impossible to insure your crypto assets. simply because there was no standard technological solutions for storage and custody that would be accepted by insurance companies. So this is over. We have institutional custody solutions that are so safe that currently really huge capital can move into crypto without any risk of management and custody. Now, volatility, market manipulation, of course, you can see a lot of happy people. They are happy because it's going down, and they are happy because they can buy low and they can buy the dip. But most of the time, the public is not very happy when it goes down, and companies that need the money for operational expenses cannot suffer the risk of their cash reserves going down somehow from one day to another by 30%. So this will be slowly solved in the upcoming 4 years as the Bitcoin will and other cryptos will permeate the society, increase its capitalization. The volatility will naturally go down as it's basically an inverse. It's not an inverse function of capitalization, but it has definitely some connection to it. Yeah, you can also see Elon Musk. So this doesn't help. If one person can do big pump and dump schemes in the market, doesn't add any trustfulness, and then the institutions stay out. But this will be slowly impossible as there are more and more big players stepping in. So if you are a big player and you are going to dump crypto with some further news, you are in the risk that other big players will just buy it out and you stay out. So this will also slowly cease to exist, or at least on the biggest scale. When it comes to AML risk, the invention of chain analysis technologies is something that opened the way for institutional adoption in the, I would say, final sense of the word. So now we know quite precisely how much of the volumes of transactions in crypto is connected with criminality and money laundering, and also terrorism financing. When it comes to terrorism financing, it's basically zero. And that can be proven not only by chain analysis, but also by analysis of the terrorism incidents and investigations into them. But all in all, for 2021, we talk about 0.15%. If it goes up in the next 5 years, because of the newly discovered crimes, it will definitely not hit 1%, but maybe 0.5%. So we know it's low. Also, regulatory risks are addressed by the upcoming regulation. So it's either MiCA in the European Union or in the US. Currently, there is some executive order on crypto oversight, and there are a lot of legislative efforts by both parties in the US. So we'll see what happens. In any case, we know that nobody is banning crypto. It's not simply possible in democratic countries anymore. So a lot of these uncertainties are away. To sum it up, and to invite the other speakers to the panel discussion, this, I think, is the last slide, is showing, I think, in quite short form, how important it is that all these risks are slowly tackled and mitigated, and what consequences it has. So we are now somewhere in the end of the alternative asset stage for Bitcoin. Other cryptos are following. Some of them will die, some of them will follow. And we are slowly stepping into this standard asset phase. This means banks and brokers of securities will be able to provide cryptocurrency services immediately in 2024. A lot of banks have already their own cryptocurrency product in drafting or development even. Maybe not in Slovakia, but I've heard maybe also in Slovakia, but definitely in Western Europe, or definitely in the US. So this is most likely going to open the way for the early majority adoption. And we can see that in 5 years, Bitcoin will be probably considered a completely mainstream and conservative asset, owned and managed by institutions as well as retail public. So thank you very much. And with this, I would like to encourage the further discussion and invite the moderator back on stage.
So we have already welcomed our viewers and attendees here, but let's welcome our guest. And first thing that I would like to do is to thank you for your attendance here. And please share something about you, like some small little pitch about yourself. Let's start from the opposite side. Please take the microphone and guys, keep it short.
Thanks all for being here. My name is Georg Brameshuber. I'm Vienna based. I am announced as an advisor to Blockchain for Europe. So this is what I do. In academia, I was focusing on legal engineering in crypto ecosystems. And what is, of course, and thanks again for the introduction, the most challenging factor at this time. Now, I would say, in general, in the crypto space is how regulations and the setup is getting up. So I think legal engineering is maybe the point here. What else do? I do block and wine in Vienna with my company that's called ValidVent. So if you're up for a glass of wine and talk about blockchain, Web3 and TLT, come on and let's connect. That'll be here.
Thank you.
Hi, everyone. My name is P.Kris. I'm CEO and co-founder of Mangata Finance. Mangata is easy and secure decentralized exchange for the people. It's built to enable exchange in between blockchains. You can trade without gas. So it means you can trade with fixed fees because that's a rampant problem in crypto right now. We are the first team in the world that has introduced prevention of front running. So no insider trading is possible on the decentralized exchange. And we have been pretty recently funded. We've raised 4.2 million from investors from Silicon Valley, New York, Hong Kong, and we are a distributed team of 20 people, with me sitting here in Bratislava.
I can try this one. Okay, great. Hello, everyone. My name is David Stancel. I work as a chief investment officer at Fumbi. And in my free time, I teach cryptocurrencies at university as well. So that's very shortly about me.
Hi, everyone. I'm Richard Fetyko. I'm the founder and CEO of altFINS, which launched a couple of years ago. And it's a platform for analytics, platform for active crypto traders. It's used by tens of thousands of crypto traders to find trading ideas. Thanks.
Yes, I'm Vasilišin. I'm a CEO of Virtuse Exchange. I like speaking, talking, and writing about Bitcoin.
So those were our guests in present, but we are having also one guest that is online. Please share something about you as well.
Hello, my name is Jakub Jedlinský. I'm a teacher at Prague University of Economics and Business, and unfortunately, I have just had a class. That's why I couldn't come to Bratislava. So thank you very much for having me as this big brother. Apart from being a teacher, I'm a co-founder of Altlift. We run a regulated fund for cryptocurrencies in the Netherlands, and we also design or help to design tokenomics, so settings for cryptocurrency-related projects. We do mathematical modeling of tokens that should be used in the project. And recently, we have started a gaming DAO. So something like an esport club using blockchain for online games.
Thank you very much, Jakub. So my name is René Darmoš. I'm CEO of MOONHILL Capital. So that's Web3 focused fund. And before we start, I would like to thank also to our partners, main partner, Ministry of Finance of Slovak Republic, also National Bank in Slovakia, Visa, Binance, Blik, and 365 Bank. Also, thanks to all of supporters, that is Portu, CRYF, Slovak Credit Bureau, and Fumbi. And also big thanks to all Expert Guarantee, which is FINAS, FinTech and InsurTech Association of Slovakia. And thanks also to all media partners. For our viewers, there's also information that you can use the Slido with the hashtag Finweek. And you can also use B2B matchmaking application that is called SwapCard. So I hope that we fulfilled all duties, and now we can dive into the topic, which is institutional adoption of cryptocurrencies. So we are certainly living in the time that is really turbulent period of our lives, that's for sure. But regarding to institutions and cryptocurrencies, I got the feeling that the situation is a little bit different. Like we can see some giants like BlackRock entering crypto through their private trust and also through investment in Circle or FTX. But also Alphabet is having its stake in Fireblocks, Dapperlab or DCG. And also Goldman Sachs and Citibanks are involved in projects Certic and Blockdaemon. And just 2 days ago, Nasdaq has entered crypto space. So from everything like this, it seems that we are already getting into the point of institutional adoption. And you know this curve, S-curve, S-adoption curve. So my first question on you is, are we already there? Are we getting to this point of institutional adoption? Maybe we are there. I would like to know your opinion. Let's just start from Richard. You are just ready, so let's start.
I guess the short answer is that yes, I think we are. And we saw that in 2020. We talked a lot about, hey, institutionals are coming, the rails are being built. And I think 2021 was definitely a big year for institutions. So you mentioned, BlackRock partnering with Coinbase to basically bring on or allow BlackRock institutional customers to basically trade and custody. But like Coinbase, when I was looking at their financial results, they mentioned that their institutional base of customers had doubled from, second half of 2020 to first half of 2022, from basically 700 to about 1,500 institutional clients that they have. So it's been a big growth, and Fireblocks that you mentioned as well, has grown tremendously. So Fireblocks is basically a custody provider, it secures the money flows between wallets, and they have institutional clients, and that client base grew from like 150 to 800 in 2021. So I think we're there. It's happening.
Okay.
I'll let someone else.
What about you guys, Peter?
I totally agree. 2021 was an awesome year for institutional adoption, even though I'd say that this is still the beginning. We are seeing now only the glimpses of the future. And what I would like to see, and I'm expecting maybe next year or in 2 years, and that would be all those investors strategic investors that invested into all those startups, then they would start acquire those startups and integrating them within their existing services. I don't know, be it some Google infrastructure or maybe some social networks or something like that. So this is the next level, the next step that I'm expecting, and maybe next year or within 2 years that could happen.
What about you, Rastislav? Do you have the same opinion?
Well, definitely. I would say it's not really starting. It has already arrived, the institutional adoption. In 2019 and 20, you had big names like Paul Tudor Jones, you had Cathy Wood coming in, you had famous MicroStrategy owner, Michael Saylor, of course, the large commercial banks like Morgan Stanley, JP Morgan, Deutsche Bank, Goldman Sachs, and so forth. And as the colleague mentioned, BlackRock and Fidelity came on board, although Fidelity has been around for years. This year, they allowed investors to invest in their 401k pension plans. So it's a big deal. But I would like to say that in order for that to continue, there has been probably like 80% crypto adoption last year, according to BCG. In order for that to continue, we need a financial infrastructure to be in place. So there are three major rails for that financial infrastructure. First, accountants have to be on board. And I believe KPMG is already on board this year. It's one of the big four and services about 20% of all Fortune 500 companies. The second one are custodians, crypto custodians. There's several dozen licensed custodians already in the market. And I believe they're more than ready, like Fetyko, Gemini custody, Coinbase custody, and so forth. But the most important piece of the infrastructure is still the regulators. And I believe these regulators have moved on quite fast this year. There's new regulations coming out of the US, new regulations in Europe, of course, in MiCA. Therefore, there's a lot to be done, but the infrastructure is being laid out. And I believe if you're not in crypto, it's still early. But I believe if infrastructure is built for institutions are in, so should we be as well.
Georg, do you have the same opinion, or I can see that you are moving with your head, so probably.
I think we all agree, and I try to give a different answer why, because the answer actually what you just reflected on is that now the regulatory level playing field is getting totally and crystal clear. And also the adoption and the awareness of what the real use cases are. Just to get off at our perspective, we are talking stable coins. Financial institutions are talking payment infrastructure and payment instruments. We are talking exchange settlements and mechanisms, decentralized exchanges. Nasdaq is talking about settlement infrastructure. So that's the DLT pilot regime. And all that is now coming, at least in Europe, up from June 2024 into law. And now everyone, and especially everyone sitting in a boardroom, is realizing that this topic is now moving from a vision paper to law, and this gives a clear oversight of what is at hand.
Maybe Jakub, will you be the only one that disagree with this?
No. I will stick to what the other people said here. I believe that the institutional adoption is real, and it's driven by the general adoption of crypto. Because according to most statistics, 500 million to almost 1 billion people have already exposed themselves to crypto somehow. So when like 1/10 of the world's population is in crypto, the institutions just must react to that, and crypto is something you cannot adopt. So I think that crypto really becomes a serious type of an asset that everyone must consider, and it's only natural. And yeah, we see a lot of progress in the regulation, which at the end of the day is a good thing, because it will facilitate many things, especially for for the institution. And I'm only looking forward to the day when some of the major central banks use crypto or say that they use crypto as the reserve asset, or maybe some of the pension funds might include crypto into their portfolio. So that will be another step in the institutional adoption, but it's happening definitely.
Okay, so all of you agree that we are already there. So one question that now bothers all retail people, like all these gains that were done in previous years, is it over already, or will it carry on? Guys, David, you are CIO here. I would like to ask you about this.
Well, I think, of course, we now see the bear market once again in crypto, so that's nothing new probably. But yeah, on the background, what we just said, and you summed it up pretty well, like what all these institution acquisitions that are happening in the space, and like companies like Fidelity offering Bitcoin to their clients in terms of retirement accounts. So I think that's a really big thing that will definitely level up even the price levels in the crypto space in the upcoming years. To what extent, maybe we will see also in a few weeks when the MiCA will come out in Europe, and maybe we will know more how it will affect the institutions and general proliferation of crypto in Europe. So, the numbers will go up. I'm pretty sure, but of course the question is in which time frame. But in the midterm, I'm pretty sure about it.
Peter or Richard, you both wanna say something. So Peter, let's
just very quickly. I don't think that games are over. You can compare this to the internet, like back in the 90s when the adoption of internet happened. It happened throughout all the angles of the society, like through institutions, but the retail and game people still stayed within the space. And we can already see that by the proliferation of the gaming subdomain of crypto, NFT space, there is DeFi, and all these subdomains are living their own life, and they are developing at their own pace. So in the future, I'm still expecting a lot of like traditional finance people to be meeting with the, hipster internet people, and all of them will meet in crypto.
Yeah, I mean, I think that's a great analogy. I remember covering the tech sector as a sell-side equity research analyst in the early 2001, when the NASDAQ crashed and there was, ridiculous amount of, bubble and overhype, in the late 90s when, startup companies, dot-com companies were being funded just off of presentations, no real businesses, no experience for the management, and just, they would IPO with ridiculous prices and there was nothing there. I mean, admittedly, a lot of that was here. It happened. A lot of speculation that fueled the initial adoption. And then I watched the NASDAQ go down for 2 years, from like March 2000 down to all the way, to basically early 2002. So NASDAQ went down like 75%. So, basically, and most of that was .com. So, it really resembles what we're experiencing right now. A lot of that, crap got basically just wiped out. And a lot of great companies, that kept building during that phase have emerged out of that. And investors who invested and stuck with it made, a ridiculous amount of money, from Amazon, eBay, and on and on. So when you look at also what gives me comfort that this is not over is looking at, smart money. Last year, the venture capitalists and like these are well-known, smart people from Anderson Horowitz and Tiger Global and others, invested $21 billion into Web 3.0 and other blockchain-based startups. And that was like 4 times as much money from VCs going into the industry than the prior year, basically, or more than the 4 or 5 years in prior. So, these people see a future in the blockchain sort of commercial space. And when these companies that were funded last year start coming out with their products, this and next year, that's going to kickstart a whole new wave of investing and capital inflow. And the fact that the prices are down and many of the altcoins 90% from their peak is a great time. It's hard when you lost a buttload of money on the way down for a lot of investors. But for institutional investors coming in now, it's got to be ridiculously, amazing time to get involved because you've basically lived or avoided sort of the initial sort of crash, and you get involved. What I think is close to the bottom here. And so,
maybe 2 numbers which are actually good news for retail investors. We're now in a bear market. We're at 20K. In the last bear market, we were back in 2019 at 8K. So still we're in very good numbers. And I guess this is still good news, even though it is not so nice out there, but still good.
Didn't want to say 2 infos.
These are the 2 numbers. So in the last bear market, we were at 8K at the bottom. Now we're at 20K. I think that still sees where the mass adoption is going to. And I think that is still good news for retail customers out there, right?
And I think the other catalyst for sort of the capital inflows and basically the price of the altcoins to recovery for the recovery of the altcoin prices will be the actual adoption of the utility of a lot of these projects. Because until now, I think a lot of effort and time was spent by these projects just kind of building it. So like LivePeer, which is a blockchain-based, decentralized video streaming, Filecoin, decentralized storage, bunch of other sort of use cases. They've really been just building out their infrastructure or their user base. and the adoption of actual use cases is ramping, but it hasn't caught up yet. And so that's when that happens, the demand for that native token will grow. So I think that the real world use cases or projects that have real world use cases will see the asset prices recover, and we're seeing more and more of these real world use case projects come to the market. So that's going to help as well. But the other thing I wanted to mention in terms of institutional adoption is that we're talking about like institutional investor adoption or sort of capital inflow, but there's also institutional adoption in terms of like corporates and businesses that we haven't touched on that's also happening right now.
Exactly. That's the thing that I wanted to ask you. Like, what do you mean basically under this institutional adoption? Because there are another angle of view. What we could say. Yeah. Maybe Rastislav didn't say anything in the round before.
I just want to add some numbers. Basically, BCG, Boston Consulting Group, came up with a report that, according to their numbers, there's going to be 1 billion crypto users by 2030. They're saying that we are somewhere around, in terms of internet adoption or comparison to internet adoption, somewhere in the year 1998. So it's still very, very early. These institutions move very slowly. Their decision-making processes are taking forever. So just two numbers. One number, BlackRock and Fidelity entered the markets this year. The newest entrants, Fidelity with the 401k, of course, but they've been investors a long time ago. They have 12 trillion under management, just these two companies. If you compare it to 400 billion market cap of Bitcoin, you can do the numbers. Yeah, it's incredible potential. These companies have trillions and trillions of assets under management. And a second easy back of the envelope kind of calculation, if only the pension funds in the US, not even in the world, entered with 1% allocation into Bitcoin, it would represent at this market cap about 60% of total market cap of Bitcoin. That would probably like triple or quadruple the price right now. So they're moving slowly but surely, and I believe it's going to be quite huge when they start to move really.
Jakub, I can see that you agree with basically everything that was said.
I do agree with my colleagues. Yes, we can clearly see that crypto or Bitcoin as a financial asset is being gradually adopted, and hundreds of millions of people have touched crypto somehow, but by far they are not using it on a daily basis. And this is another, let's say, quality step in the adoption that will precede some deeper not just general, but also institutional adoption of it. And it's not just finance. Of course, there are some sectors that are mentioned notoriously when speaking about crypto, like the insurance industry or real estate industry or the gaming industry. And the point with games is that it takes years to produce an AAA game, like a good game that should that should show the real potential of it. And I'm not really sure whether it will be cryptocurrency projects that will dominate the sector in 5-10 years, but rather it will be the traditional companies that will just tokenize their services because the cryptocurrency companies or services will show them the way. So I think it will be the traditional companies adopting not just blockchain but also tokens, and these tokens might be the new successful cryptocurrencies.
Okay, like I said at the beginning, it looks pretty bright for crypto and institutional adoption. But now I would like to ask you if there's anything that is in your mind that could ruin this seemingly really successful way for the future of crypto and institution. Is there anything like this?
I guess regulatory risk is the biggest one. We got the expert here on that topic. Are you going to ruin it for us?
I guess that now we have some kind of oversight of regulatory risk now, which is good. But I think something is more risky is what is happening in mass adoption with digital central bank currencies. And I do not see that a digital euro backed by a European digital bank, central bank is coming up in the near future. We do see euro-backed stablecoins. We do see the circular movements, right? It's out there. And stablecoins, they already reached the mass adoption. So it's obvious that this case is to some extent touched. But in order to reach the full scale of mass adoption, we definitely need one on or an off ramp, or simply as a position one can hold in the digital economy is a digital euro, a digital equivalent of the euro, what we right now have. And there is definitely the central bank, which is European Central Bank, at stake and in responsibility. And they do not see in mass use cases that the European Central Bank will come up with such an CBDC in the near future. So definitely that is one part, one major pillar stone in the European, let's say, crypto ecosystem, which is still missing. And I don't really see, well, a clear sign that something will come up in the near future, which is something else than vision papers and some reports issued here and there.
Everyone is sharing this opinion, or would you like to add anything?
Yeah, as we mentioned, I definitely the thing I'm worried about most is definitely some incompetent people out there trying to create super strict regulations and completely crippling the benefits that the cryptocurrencies bring us. So I'm not so worried that there would be slowdown in terms of adoption of institutions when it comes to crypto. But the thing we now call crypto, it could be very much crippled by wrong approach when it comes to regulations and banning proof of work, things like that we already seen on the European Parliament. We now see it in the US, and some of the states are considering this to happen. Then, of course, we have these, travel rules and stuff like that could significantly, cripple the whole industry. And also the previous, I think in the morning we had the discussion here, how institutions will be able to work with digital assets, and if we will ban unhosted wallets or self-hosted wallets, it's the better term for sure. So, these things can definitely, to very much extent, influence how crypto will be adopted. And there's still, I'm a little bit afraid that, in Europe, it could be taken from a not such a right approach. We will see, I guess, in a few weeks, the finite version of MiCA and what it means, even though I assume we will still not know how much it will affect DeFi and how much it will affect the NFTs, because there will be probably, as it's usually the case, a lot of room for interpretation to what is actually applicable to what kind of product. So I don't have such a high hopes from the MiCA being out, because I'm sure there will be still a lot of things unclear, but and hopefully just unclear and not directly straightforward, wrong.
you want to add anything else to this?
I mean, I think there's other issues that are encumbering mass adoption from both retail and institutions. I mean, it is security, right? I mean, it's complex and scary sometimes to to deal with blockchain-based sort of DeFi projects, staking, dealing with smart contracts and constant hacks that are happening. I mean, I think last year there was like $4 billion worth of DeFi assets that were hacked and stolen. So for a chief investment officer at some institution or maybe a corporation, that's really that's not a risk you want to take with your job or with your company's assets. So, but that's not a barrier that's insurmountable. That's being addressed, that's being improved. But even just like a couple of days, Wintermute, which is like a well-known market maker, screwed up and lost 750 million or so, because of a hack. So it's hard, and they're the experts. So that's one thing, sort of the security and complexity of maintaining security of your assets. And the other thing is your user experience, dealing with, first of all, multiple, blockchains and moving assets from one blockchain to another is a pain in the butt, really. And just generally, these applications still are not particularly easy to use, from a user experience standpoint. But that's, again, something that will clearly improve, and that's not a big barrier, but has a lot of room for improvement. That will help the mass adoption.
Rastislav, you wanted to add something?
Yeah, sure. Just like after every crash, even after this one, politicians like to use this crash for getting more control over the markets, imposing more taxes, regulations. This is nothing out of the unusual. And I think in this case, it might be justifiable a little more than in other cases. But what's an interesting part on this is that the regulators are starting to differentiate, to discern between Bitcoin and 20,000 other crypto tokens. Regarding Bitcoin, most of the heads of probably most prominent regulators in the world, like the Securities Exchange Commission, Gary Gensler, or the CFTC, or the head of Treasury, Janet Yellen, have already endorsed Bitcoin as a commodity. And it's just a question of time before the CFTC, the regulator of commodities and futures in the market in the US, is going to actually legalize it as a regular commodity like crude oil or gold. That's not really the case with the remaining crypto tokens. Most of these regulators express their opinions that most of these crypto tokens or altcoins are going to be deemed as securities. So right now they're imposing something like a unregistered securities potential, and that it's quite a danger for the remaining crypto tokens, I believe. The question is whether the new regulations for the crypto tokens and everything else is going to prevent the actual frauds and scams. And my answer is simply no, because in highly regulated markets like during the Madoff crisis or LMTC crisis or spoofing market regulations or manipulations in a commodities market, all these markets were highly regulated, yet there were all these problems, and the regulations could not prevent anything. So I believe the regulation is not really an answer to everything, but eventually we have to get ready for it anyway, because they're going to move no matter what we think about it.
Okay, thank you guys for these opinions. Those were very, very well said, I would say. And you already have mentioned CBDCs. Like regarding to future, and one of conditions for better adoption of crypto for institutions, like this central bank digital currencies are needed. So you see it as a positive thing in the crypto space, but some of people, they see it as some poisonous apple. So I would like to
maybe before we move to CBDCs, could I perhaps add something to?
Or Jakub?
Yeah, if I could say something to the previous question before we move to CBDCs about the risks, because at this stage I would like to take the liberty of playing devil's advocate. I think that the regulation might be beneficial rather than a risk. Of course, it can be. There have always been hacks and scams and stuff like that, and actually the UX and accessibility of crypto is improving, but there might be another risk, and which is related to the price, because we have seen in the recent years that the prices of crypto correlated with stock, with S&P or Nasdaq, and the adoption of crypto to a largest extent has still been driven by the price and by speculation. And if that happens, that now the markets are falling, all of them, but if the other markets return to bull market and crypto keeps falling, which might happen, if Bitcoin goes below 13,000 and it keeps falling, then this spell will disappear, and then a lot of people will just lose their attention for crypto, and that might slow down the adoption of the other utilities as well. We are still not at the stage where people are not looking at the price and just use it for the blockchain technology and whatever the benefits the crypto might have. They're still looking at the price. And if the price keeps falling while other prices go up, this might be a problem.
Interesting point of view, very valid as well. So, but those risks that you have mentioned, it seems for me at least that it's not something crucial, or it's not something that we couldn't work with, or it's not that huge risk, I would just say. So possibly it is, but I believe that there are already people who will take care of most of these risks. So I would get us to the topic that I have mentioned already before, CBDCs, because I'm sure that it's very connected to the institutional adoption of crypto. So David, your turn.
Yeah, especially in the last few months, we could see that not all stable coins are created equal, nor they are necessarily stable. And that's definitely something that, where CBDs could bring a lot of value, because of course a lot of people do. And I mean, it's nice to have some stable assets, and it's definitely useful, and many people would appreciate it. Of course, the question will be what exactly will be the infrastructure underlying the CBDCs, and what will be the rules and conditions under which people can actually use it. We are yet to see how this is gonna, play out. But still, yeah, we just need to be really like straight with that that's not really crypto in that sense, and which is okay. It has different trade-offs, but we shouldn't be lured into this poisonous apple, as you label it, which I think it's a good term.
Maybe one thing to add, that's the Terra case is, I guess, the case at hand, also with the picture of the apple we just had. What is lacking in the crypto space in general are market standards, right? If we would have come up like the crypto economy itself with a market standard, which is reliable and proven, market proven, well, we are not in the position to talk about whether a CBDC is necessary for mass adoption, right? At the moment, I do not see any market standards out there would guarantee a stablecoin solution at the equivalent of a CBDC would give for a mass adoption, institutional adoption of cryptocurrencies. So maybe that is also the lesson of Q2 2022, that especially in the part of stable coins, we do lack especially market standardization, but not only in stable coins, but in various fields, from protocol architecture to token sales. If we talk about the various platforms, CeFi, DeFi platforms, which have been hacked, or even protocol hacks, this is clearly a sign that there haven't been established, let's say, market standards who avoid such fundamental risks which are still out there. And I guess when we talk about CBDCs, there is the case at hand, and I do not see right now any stakeholder in the crypto economy which could substitute a CBDC for mass adoption in order to achieve the goal of itself.
Peter, I would like to know also your opinion on this.
I don't think that CBDCs are poisoned apple, as you framed it. I think it's a net positive for crypto. First reason is that it legitimizes the blockchain technology. So it's like now the institution, like the top institution, European Central Bank, is doing something with the blockchain. And that gives a big signal to people that the blockchain technology is legitimate. We didn't have that like 5 years ago. So this is a good thing. Second thing is that I expect that CBDCs will somewhat merge with DeFi and all the blockchain. So for instance, you will go to a decentralized exchange and you will have there a CBDC, you will have the Ethereum and other tokens, and it will all be mixed within each other. But the point is, it will be traded on decentralized exchanges. So it will enhance the adoption. It will be a fuel to decentralize finance anyway.
I would maybe have a question for Peter. Does it really matter that they legitimize blockchain if they outlaw crypto, the same entities behind them?
Yeah, but I don't think that the crypto will be outlawed. Like it's not that black and white. It might be limited to some extent, but I don't think it will be outlawed. And there's another angle to this frame, and I always like to look at the history. And in the 90s we had public internet, and we had this wave of intranets, like this private networks, like private internet. And as history has played out, it didn't work. So the private networks didn't get the network effect. This is what I'm expecting with CBDCs as well, that they won't have that much innovation happening on top of them. And that's why public networks, or like public DeFi, like the more original crypto networks, they will win just because they will out-innovate like CBDCs. But they will certainly put some fuel to the industry, which I'm not scared of.
Actually, the countries that are promoting CBDCs the most, like China, Nigeria, or Ecuador, they are very hostile towards crypto. So I think that this is a regulatory danger that the governments will try to enforce CBDCs rather than let it compete with crypto. So I don't think that a CBDC is a good idea, and I think that it's an evil thing and hostile towards crypto.
Finally, we will come to some disagreement. I like it. Rastislav, what is your opinion on this?
I totally agree. It's
But who with?
With the colleague on the screen. Yeah,
Jakub, okay.
Jakub, yes. It's probably the biggest threat to our liberties in the modern history. The government, through CBDCs, can stop your payment, can seize your funds, it can expire your currency. Basically can say, right now you have to spend your euros in the next 6 months, and if you don't, we'll just expire it. So they're going to have a total control over how much we spend, what we spend on. You driving a Tesla, okay, you spend too much electricity for this month. We're going to stop all the payments for your charging station. All these features can be incorporated into the CBDC without any issues. And governments, since they're going to have the option, eventually they're going to use it. On the other hand, there is an advantage to it because people are going to start to realize that there's a difference between CBDCs, which are total control currencies, and Bitcoin, which is open source, decentralized payment system where you don't need a permission from a third party for payment or for receiving a payment. Basically, they're going to realize the difference. And that's the good side of the CBDCs, the only good side I can see, that people are going to actually wake up.
Is there anything you wanted to add, David? Because I've seen that you... No? Okay. So from what you heard, you have to make your own decision about CBDCs. But I would just add to your point of view. But from my point of view, for example, if there are CBDCs, but there are also stable coins like we have now, so you have this parallel system, then and you can choose, you are able to choose which you use, then still parallel system and it's okay. But if we are forced to not having any stable coins, only CBDCs, that would be the case that is the worst.
I think they regulate stable coins, that's fine. They have to be backed one-to-one with real currency and so forth, or assets. That's fine. But to establish CBDCs as the only way or the only stable coin is dangerous. But if they let them compete with, the established or new stable coins that satisfy certain standards and regulations, like USDC and others, and we have a choice which one we use. I agree with Peter that I think there's going to be a lot more innovation with the non-government sponsored stablecoins, and in the end, those private stablecoins will actually win if the government doesn't actually prohibit them.
What you've mentioned that there are like good stablecoins and bad stablecoins, but for some reason I consider almost all stablecoins to be bad or like evil, because conceptually they're coming from like traditional financial system, and like all the stablecoins are just mirroring the USD or the euro. And I think that the whole crypto industry are having this wrong, like they're looking into the wrong alley, even like the decentralized stablecoins like DAI, like from MakerDAO. I don't think we should go to experiment with like in this way to try to mirror the dollar. We should try to create a new currency that is stable by itself, that has some internal stabilizing mechanisms, or it's becoming a standard. It's becoming a unit of account that people are measuring the value in that coin, which is not the dollar. And if the CBDC will take the role of the major stablecoin, well, crypto researchers will have to focus on things that are in a more brighter direction.
I agree with Peter, but we could see like actually Facebook was attempting to do this with the Libra project and to create a new asset with a new qualitative monetary qualities, and we know how that ended up, or it didn't even like launched. And of course, also it was mentioned that of course the open, the stable coins and the open blockchains will be out innovating anything that's happening in the private networks. And that's what I'm afraid of, is that of course governments will not like it and they will impose restrictions. And now is the question how big of restrictions they will really do. And but that's something that can be really dangerous.
Yeah, I agree with those restrictions. Like right now, they're regarding to algorithmic stablecoins. Now they are not forbidden, but they have like this two years period that they have to be tried and researched and so on. And regarding to stablecoins in Europe, the new MiCA is talking about this, and I don't know if we are allowed to share some information about this today. So, but just simply said, it's not bad. You want to say something more?
I guess the news is already out there, and the news is so I lost my words, sorry. And a stable coin, which is based on algorithms. Well, it's still already out there. That it's not asset reference and it's not an e-money token. So such a stable coin would definitely work within the upcoming European framework of crypto assets. The question really out there is whether this algorithm in an economic effect refers to an reference which is backed on an asset. So there we are with the ARGs, asset reference tokens, or whether it mirrors simply an e-money token. So and that is then, I guess, where we go into token engineering in detail and into the details of the algorithms in order to design it accordingly. But I guess the window is open, the door is open, and the genie is out of the bottle. So let's build.
Okay, we have started a little bit with central banks, digital currencies. So let's move a little bit to the banks. Like, where do you see the role of distributed ledger technologies in financial services and banks for payments, clearance and settlement systems, fundraising, securities, loans and credits, trade finance or customer KYC. Where do you see it, like the biggest added value, and where will it go?
I think that's a sector that we see today already being ripe for disintermediation. And it's happening, right? DeFi platforms that have launched, right? You get decentralized exchanges, you got money transfer that's much easier to do today than through the banks. Remittance payments. I think, even insurance, we're starting to see some insurance offerings and capital fundraising. I mean, that was one of the, first, although maybe unfortunate applications, but, it worked. So I think that they're going to have a hard time. And Visa, MasterCard, they're all trying to enable their huge fleets of merchants to accept payments in crypto. But because they're under a threat, I think, Ethereum and other networks are going to compete with them and effectively. And I don't see them really defending their positions. So I think the whole financial sector is the first one to get really disintermediated.
If we would accept a scenario where like traditional finance would still somewhat coexist to decentralized finance in the same way, like there is still paper mail to email, right? It still exists to some extent, but the email is like much bigger. So what do I think that decentralized finance has the most to bring to the world is, in the light of the current geopolitical, like Russian-Ukrainian war, is that decentralized finance is a politically neutral financial infrastructure. And that is very beneficial when you want to do international settlements, when you want to have reliability of the payments and reliability of everything working 100%. And I believe this narrative will grow over time in coming years.
Plus showing that it's also fulfilling the promise of being more cost effective, right? I guess that's now what's going to be happen with the DLT pilot regime. And that's what I think every market participant and infrastructure stakeholder needs to realize, especially with this intermediation. The idea is there, but take gas fees into consideration. Well, and this intermediation is there where you start calculating. And I guess the effectiveness of being cost effective, that is still due to be, to be calculated and to be shown. And I think that will be demonstrated soon anyway. But still, I think that is what we need to see, especially when it comes to financial infrastructure and DLT-based layers.
Would you like to add something?
Sure. In the space of loans and credit and payments, commercial banks had monopoly for the last 100 years. They created this little cartel. And for the first time in history, they have a predator in the form of CeFi and DeFi companies, especially CeFi companies. Let's just refer to them as crypto banks, have gained a lot of market share from the existing commercial banks. However, there are major risks associated with the crypto banks. First of all, they're not really FDIC insured, or they don't have insurance on their deposits. Therefore, they're running three major risks. One is the counterparty risk. Another one is the hacking risk. And a third one is the fraud risk. And we could have seen these risks materialized in the last couple of months and years in infamous Celsius crash. 2 years ago, there was a Cred-Earn crash. Not too many people remember it, but it was a fraudulent company as well. Yet, despite all these reasons and risks, crypto banks are gaining market share every year. And there are, I would say, three major reasons for that. Two major reasons. One is that they provide much higher interest rates than the existing commercial banks, which offer basically on to zero to none interest. Their approval for loans are literally within minutes in crypto banks. You just put a collateral in Bitcoin and you get a loan instantly, as opposed to commercial banks that approval process takes sometimes weeks if you ever get approved. But more importantly, or a big advantage than the first one is the social advantage, because the crypto banks are more inclusive than commercial banking. According to the World Bank, almost half of the world's population have almost no access to banking or very limited access to banking. And these crypto banks actually include the rest of the population. So the marginalized people on this planet, like poor people, immigrants, people from third world countries, and so forth. So you don't need a huge KYC onboarding processes with the crypto banks to enter. You can invest in whatever you want without the need for some kind of investor protection programs, restrictions. Therefore, according to game theory, crypto banks are going to gain more and more market share in the future, and commercial banks are going to lose pretty much everything eventually.
Jakub?
I don't really agree with it. Do you think that AI-generated art will replace the artists, like Midjourney AI or Stable Diffusion? Will it make the artists obsolete? I think to some extent, and in some respects, yes, but in other respects, not really, because the artists will use it, and they do use it to cut down their costs and to save some time. And the same thing applies to banks and crypto. The banks are evolving, and they already adopted crypto, and they keep adopting crypto. So maybe they will stop offering some services because these services will become obsolete. But I believe to a larger extent, they will just incorporate DeFi, tokenomics, or cryptocurrencies as they are into their services. The banks are rich and they pay good wages to some of the most brilliant minds, and these people will just continue working for the banks, and the banks might invest in some DeFi protocols or governance tokens or whatever. I think that the Web3 idea that is exaggerated. It's just another way how to govern projects, and I think that the traditional industries will play their part in that. There's no reason why they wouldn't. If they see money in it, they will just put the money in it and participate. So it's evolving, and I don't think that the banks are the enemy. Plus, there is the thing that there still will be fiat in parallel to any cryptocurrency for a long time, and it's the commercial banks who create fiat, so they are quite important in this sector. So plus people want to communicate with people. Some people like to play with DeFi, but some people just want to call someone and let them do it for them. So that's what the bankers will do in the next decades, I believe. They won't get obsolete. Some of their services maybe, but banks will stay.
Okay, so from what I heard from you is that basically banks will stay here to be like some offices, and they will adopt the decentralized finance. So let's say like it was done also with unfamous Luna and UST, and on Y Accelerator in America, there were already startups that were building on top of it. So basically banks will be doing something like this, that they will basically leverage those protocols, right?
Yeah, that's a perfect summary. Thank you. Yes.
Okay, nice. Thank you very much. Yeah, definitely. If you don't agree or you want to add something.
Definitely don't agree. If this were the case, then candle companies would become electricity companies, If this were the case, then the horse and buggy companies 100 years ago would become the best automobile companies. And if this were the case, then the Kodak would be the best digital camera in the world and would have an iPhone. They all became obsolete and they got decimated by the innovation and disruptive technologies.
Yeah, but these are
that banks can protect themselves is through the politicians, lobbying and regulations. But the product is just not there to compete with the existing technologies.
I don't really think that
the best thing is like when you don't agree with each other, because then in the end it's on each of us to make our own decision about it and opinion about it. So I believe you can make your own opinion about this from what you heard. Okay, we are getting to the last 5, maximum 7 minutes of our discussion. So that could be time for. We have talked about many things. So if there's anything that you would like to this panel discussion, I would like you to do it now. So. Is there anything what you consider important?
I would just sort of emphasize that, when we see a lot of people sort of see the headlines that, crypto is crashing, but that's just sort of the surface, and it has a real world impact on, people who invested. But underneath all that, sort of the innovation that's still happening and the adoption by institutions, both in terms of like the investing institutions, but also the businesses and corporations, adopting blockchain and cryptocurrencies is happening, and cryptocurrencies as well as the smart contracts and DeFi projects, it's happening. So in all of this sort of a frenzy and media frenzy around, the price crash, people tend to think that it's all over, and when in fact it's actually just building for a whole new phase.
Yeah, absolutely. I underline that. And I would add something else because we had the merge last week. So let's think back. What is the basis of all this? It's the technology. And still what needs to be done also in the future is to further build scalable DLT technology. This is what happened with Ethereum, of course, with the merge. It was also, but beyond many other reasons, again, and further iteration of further development. And I think that needs to go to happen to build scalable DLT technology, blockchain technology. That development rate still needs to happen and to pick up even more.
You don't have anything to add? I would just like to ask you, is there any single event that could somehow really accelerate this trajectory, this roadmap? Do you think, is there anything like this, or it has its natural own way of how to progress it? Hard question, I can see.
One lucky shot. The European Union is adopting Bitcoin also as a legal tender and a legal form of currency. That would be a huge wave. Or the US or China, let's say, or a huge market worldwide. Whether the European Union will do it, something sooner or later we'll see. But I guess that would be a huge wave.
Definitely.
I have one of these scenarios of the future that might happen, might be interesting even to accelerate the whole adoption of the space. And I would like to see in some point in the future that right now you have crypto networks and they have different governance stakeholders, right? Because whoever owns the token is like a decision maker over the network. I don't think that the group of decision makers should be like exclusive to some internet online community. It can be anyone. It can be me, it can be a community, it can be a bank, or it can be even a central bank or even a government. So at some point in the future, I see that, for instance, ECB, European Central Bank, would hold, 10% of the tokens of Uniswap and would contribute to the decision-making on how to shape the public protocol and what is the future. So this is what I like to say when there are like these community meetings over governance, for instance, Uniswap. Right, and they are discussing whether they should make the change in the protocol because they want to be compliant with the regulation. I would say on the meeting that well, there is no one coming from the regulators on this online meeting phrasing their opinion that that the protocol should be shaped somehow, so invite them. And if they think that this is the better design of a protocol, let them state their opinion here on the governance meeting of the protocols. So I would like the institutions to become part of the decentralized finance in the future.
Sounds too good to be true. Jakub, maybe do you want to add anything? We cannot hear you again. Your mic is muted.
Yeah, I agree with my colleague that if a major central bank like the one of European Union or Eurozone, US or Brazil or Mexico adopts Bitcoin or says, hey, it's a legal tender, or at least we have it in the reserves, or the national pension funds has like 20% of money in Bitcoin or any other crypto, that would be a booster, something that sends the whole industry up, and that would win a lot of trust for all crypto asset projects.
Would you like to add anything, Rastislav?
Yeah, I'll just look at it from other perspective. I believe we don't need to accelerate it. It's already fast enough. If you look at the internet adoption in 1997, we had about 100 million internet users over the world, with 63% a year growth in adoption. With cryptocurrencies or crypto assets, we have pretty much similar amount of users right now, but with 112% increase in crypto adoption. That's a double of the speed. And internet grew quite fast. So this is double of the speed of the internet. And I think it's just the right speed for people to realize and start using it in the future. I don't think we need any faster speed.
This was really nice word at the end of our panel discussion, that we are on the right speed. And I would like to thank you once again for your participation here, for your wise opinions. And I believe that we will meet here in 1 year on next Finweek. Thank you very much once again, and see you again.